All right, all right, all right. Recording is rolling. I appreciate everybody who's here, joining, trying to learn Intro to SMC, right? This is our second class to SMC, Intro to SMC, that we're going to be doing. A part of our Playbit series. We're going to be talking about market structure part 2 today, going in depth from our higher time frames to our lower time frames. We'll talk again about strong highs and lows, weak highs and lows, how to identify a certain range where we are looking to trade. We're also going to go over high R&R with a low win rate versus low R&R with a high win rate. This is probably what we're going to go over first to understand why we actually play or use these setups, right? These smart money institutional setups. Why we like to allow that for time effectiveness. We'll talk about that as well. Obviously, it's all personal preference. We'll talk about how you can personalize this to yourself, right? If you want to scalp, swing, whatever it is, however you're trying to trade. We're going to talk a little bit about supply and demand, liquidity, intro to Wyckoff, right? It's going to be a whole lot of information packed in here today before we get into the actual technicals. So to start this off, we're going to talk about high R&R with a low win rate, which is found within these institutional concepts, versus a low R&R with a high win rate. Why do I actually like these concepts? Why do I like waiting this long, right? So understanding what R&R is in general. We talk about risk to reward a lot, but just to reiterate it, right? Everything that you risk is what you are able to make. So understanding what R&R is in general, if I have a long or short position out, if I have a 1-to-1 risk to reward ratio, right, then what I am risking is what I am possibly going to make on this trade. So if I'm risking $500 with a 1-to-1, I'm possibly going to make $500 if my TP were to get hit, right? Obviously, the more, the better. 2-to-1 means you're going to make double what you risked. 3-to-1 triple, right? You can go up the list as far as that goes. But understanding what R&R is very important. Now, what is SMC and how does this work, right? With a high R&R versus low win rate setup. So we're going to go ahead and put down high R&R. Plus a low win rate. This means there will be multiple instances, right? Multiple times. Let's just get rid of this background, make this black, make this a lot larger. But we have a high R&R and a low win rate setup. Now, you can also apply smart money concepts, the technicals, to a low R&R and high win rate setup. But personally, as far as institutional concepts go, I'm going to be utilizing this high R&R plus low win rate setup, and we'll go over why just now. So we have this, our high R&R and low win rate, and then we have our low R&R plus high win rate. Now, what does this mean, right? Your R&R, your risk to reward, is going to be much lower, but your win rate is going to be much higher because you're either more conservative, you wait a little bit longer, you're more patient, or you like higher time frame setups. Completely up to how you like to trade, right? But understanding what this high R&R and low win rate P&L is going to look like is going to be very, very, very important within our analysis today. So within this high R&R low win rate, right? Or sorry, well, let's just start with the low R&R and high win rate, right? So this means that you're going to have a lot of instances, right, with low R&R where you're slowly building up, win, 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 right? But what happens when you get that one loss? Something like this happens, right? You get a large dip within your P&L. So how do you bring that back? Win, 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 win. Low R&R, right? Low setups, dip in the P&L. Win, 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 win. Higher setups, you take a loss, dip in the P&L. You take 2 losses, very bad dip in the P&L, right? And now you have this situation where it seems like you're always trying to get back to break even or always trying to find this all-time high, which simply just does not come into place. Now, how does this high R&R and low win rate effect work? Well, it's going to be the literal opposite of this. Small loss, small loss, small loss, small loss, huge win. Small loss, small loss, small loss, huge win. Small loss, small loss, small loss, huge win. So now all of a sudden I've literally inverted my P&L as far as how this goes because I am taking more losses, but my wins are large, right? And they completely blow all of the 5-6 losses that I had up until that point out of the water. Now I'm completely in profits. I'm hitting all-time highs every time I hit a high R&R trade, right? Versus this low R&R where it's I have to win a certain amount to completely keep this stepping, right? Keep this going. With this high R&R and low win rate status, right? I'm now able to flip the script, flip the way that I'm making money within the market versus, right, trying to always catch myself at break even or always trying to find that new all-time high. And that's why I like this high R&R and low win rate. I'm okay with being wrong 2 or 3 or 4 times right before that actual move happens, because then these don't matter. That's just a lesson, right? That was experience that I was getting into, experience that I was learning. And now all of a sudden that I'm in this trade that hits me 10 to 20 R&R, right? I just made 10 to 20% on my account. I'm completely fine with that, right? I don't want 2, 3, 4, 5, 6, 7, 8, 9, 10 trades that I have to win in a row for me to reach that 10 to 20%, right? Obviously, it's completely how you like to make money within this market, completely how you are sitting in your desk, right? Whenever you are trading, completely up to how you like to trade as far as scalp swings, anything like that goes, right? But as far as I'm looking at this, I like this high R&R with low win rate setup, because now it flips the tables, it flips the odds, and allows me to make a lot more within a lot less time. And I only need to be right this one time, because now my entire, right, 3, 4, 5 losses that I took on the way there has been blown out of the water from this one move to the upside right here. So this is this high R&R and low win rate that I am looking for. If you are looking for low R&R and high win rate, that's completely fine with you, right? That's completely fine as well. But understanding what this is very, very important to how institutions trade and how we get into it. So with that being said, understanding why we are actually trading this way, why we are actually utilizing patience, why we are actually waiting up until that point to everything is confirmed, because now I have that ability, like I just showed, right, with our P&L, where it's just loss, small loss, small loss, small loss, small loss, big win, right? Small loss, small loss, small loss, big win, small loss, small loss, small loss, big win, versus small win, small win, small win, big loss, small win, small win, small win, big loss, small win, small win, small win, big loss, right? High R&R, low win rate, low R&R, high win rate. I do not care about win rate. I only care about R&R. You see funded traders out there, right? FTMO, you can go look at their interviews, right? You have traders out there with 20% win rates that are pulling out more payouts and bigger payouts and larger payouts than all of these traders, right, who are focusing on a 70 or 80% win rate. Your win rate does not matter as long as you are profitable, right? And that's where it comes from, that low R&R, or sorry, high R&R, low win rate basis, that mindset, right? So now we're going to go ahead and go into market structure. Part 2, we'll talk about a little bit about our part 1, reiterate that a little bit, but we're going to go into a part 2 just now. But as far as market structure goes, right, we talked about bearish trends, lower lows, lower highs, as we come down on our higher time frames. And we also talked about our bullish trends as well, as we're making higher highs, higher lows. As we are coming up into these areas, we reiterated strong highs and strong lows as well. A strong low or high is a low or high that produces a new low or high. So this low produced this high, right? So we can consider this low a strong low, this now a weak high, as we are in a bullish trend. We're looking for the next strong low for that continuation. Right, same thing goes on this side. Strong highs as it caused a new low, strong high as it caused a new low, right, as we are moving down for our bearish trend. Now, with that being understood, we talked about trends within trends as well, so we're going to go ahead and reiterate that as well. In a higher time frame bullish market where we're making lower highs and lower lows, our internal trends, our hourly chart, anything below, right, is going to hold bullish trends on the way up, right, and bearish trends on the way down. So we'll see our lower time frame trends within trends being formed. Now this is how we can do that calculation from our higher time frames to our lower time frames to start to enter those high R&R trades. So let's just draw this as a different color. Right, we've got the black on there for the lower time frame trend, right, from our higher time frames to our lower time frames. So understanding that at this point in time, right, we have our trends within trends. How are they built? How are they progress? Right? Our lower time frames make up our higher time frames. So how do we do the analysis to enter the lower time frames from the higher time frames to the lower time frames? Okay, so we're going to get into a little bit more market structure. Yesterday we just utilized an ETH trade, right, that was only on the H4 just to understand the market structure and the range that we were in. But we're going to go ahead into that same exact range, that same exact scenario, and we're going to show how we can now do this with a higher time frame to lower time frame, just utilizing the H4 and the H1, right, trade, and how we can increase our risk to reward and our time effectiveness with that as well. So I also wanted to go over time effectiveness, which is what we'll do right now with the R&R statement, because we just talked about R&R, right, how the time effectiveness works. Meaning, if I'm looking for that low R&R to high win rate setup, right? Obviously, I can be very, very conservative within this point in time. Wait for the break of structure to the upside, right? We had our first right here, second right here that shows that demand mitigation within these areas. We can look down at the institutional candle that sponsored that move. Right, we'll get into institutional candles, everything like that as well. I'm not here to spit this. I'm just going through this fast so that we can understand the R&R portion of it. So if I'm in this trade right here, let's say I took a long, right, tried to take it up to higher time frames, and I held my stops below either this demand zone here or this low right here. Let's just say we took it up to the top of the range, these highs right here, this buy side liquidity here, as well as this fair value gap that is present. So if we had this point in time, right, let's think about the time. Let's think about the time effectiveness. This is a 4-hour chart, right? So we're in our trade right here. Instantly green, that's great. We caught something very conservative. We caught something that is showing that trend shift, right? This is what we want either way. This is not a incorrect trade, right? As long as it is profitable, you are good to go. But we get that break of structure upside once, get that break of structure upside twice. We have the liquidity that is presented there. Price comes back down, takes out that liquidity, mitigates that institutional candle that sponsored that break of structure to the upside, and then we start to see that move up into the range. But at this point in time, right, to receive your 4-to-1, so you made 4 times what you risked at this point in time. We'll bring this out to here. Right, and we will look at the time effectiveness of this. We need to understand how long this trade actually took. So to make 4 times what you had risked, you're waiting 29 days. You're waiting an entire month to make 4 times what you had risked within this trade right here. Now let's do a little bit of time effectiveness and wait for that break of structure, that continuation to the upside on a lower time frame, right? So at this point in time now, we understand it took a month for us to make 4 times what we had made. But now let's wait for that break of structure upside, right? That full breakout, which is what we received right here when price moves to the upside, comes back down into areas of institution. Let's wait for the liquidity rate and break of structure. Liquidity rate is shown right here to the downside. Break of structure occurs right after that. Where's your candle before that candle that broke that structure point, right? We can see that demand zone that is presented right here. And then once that occurs, from our 4-hour to now our 1-hour, we're just going to be doing back testing as we are looking at this, okay? So we get that break of structure to the upside, price comes back down, and then breaks structure to the upside right here. A high that caused a low is broken to the upside right here. That is confirming now my 4-hour trend shift. My 1-hour has now broken to the upside, and I have confirmed that now. So what do? Candle before candle that broke structure to the upside. Right, there is your break of structure to the upside. Candle comes back down into these areas to mitigate that break of structure to the upside. We can now enter a long, right? This is just on the H1. I'm not even going down to my lower time frames at this point because it is not important for those who are just beginning. You guys want to be able to find that direction and find that find these plays on the higher time frames before you go to the lower time frames. When I started out with SMC and I started out trying to trade this smart money concepts, right? The thing that is going to hurt you the most is when you get into a 4-hour demand zone and automatically go to your 1 minute or your 5-minute time frame. Go from your higher time frames to your lower time frames. Confirm it from each higher time frame to each lower time frame, because it's going to bring a lot of stress and a lot of time inefficiency and a lot of losses, right? If you are trying to guess this very bottom right here, just wait for that break of structure. Wait for the entire trend shift, because now I've made this 4-to-1. We just showed that, right? 29 days. It took an entire month in 1 day. Done, right? This is why we wait for that confirmation from our higher time frames to our lower time frames. Now let's take it up to that same exact spot, right? The same exact area where we took profits on the other one. 25-to-1, right? I have the ability to now literally 6 times this trade right here that took a month, right? A month for me to take profit to 4 times what I had risked. I had now 25 times what I had risked, right? Within, let's bring it up to that take profit. All the way up here. Right, I've made 6 times that. within 14 days. So half the time, I made 6 times what I had made right here just by waiting for an hourly break of structure to the upside to confirm my 4-hour trend shift, right? That's it. That's all I did. That's why I utilize patience, because now I have the ability to walk away from the charts for a month because I just made 25% on my account. I'm only aiming for 2.5% a week, right? I just made 25%. I'm good to go. This is where we can get in these situations to where I don't have to trade every single day. I don't have to trade every single week. I don't even have to trade every single month, right? Because I've used this time effectiveness up until the point to where I have that entire trend shift, I have that entire trend break, and now I can be able to get into these trades and take profits much quicker, right? I have that forward one, and what do we say, a day? Right? A day. We had a 4-to-1 in a day, which was this move right here. I can take profits, set stops to BE, let this run all the way up here, and be good for a month and a half. I'm going to sit down, walk away, whatever it is, right? So understanding that that time effectiveness is going to be super, super, super huge for myself when entering trades and when knowing that I can now profit a lot more in a lot less time, right? I'm profiting 6 times more than I was on here with half the time that we had showed right here. So understanding that we can wait for these setups to come into play gives you much less stress, right? Because now I don't need to come to the charts and trade every single day. I don't need to come to the charts every single session and have to catch a trade or have to win, right? Have to win this amount in a row. That's completely fine. I can wait for these setups to come to play and make that profitability from that. What'd you say, Algo? My fault.
How am I supposed to get my trading fix though if you're giving me the sauce, bro?
Right here, these classes. Yes, sir. Yes, sir. We getting it going. But it's that same ability, right? Just understanding that we can now make a lot more in a lot less time. We have turned the tables, right? And this will allow us much less stress, allow us more patience, and allow us to actually understand and analyze the charts. Because now I'm not looking for a trade on the 1 hour time frame or the 5 minute time frame when we come down into these areas, right? I'm not looking for that. All I'm doing is just waiting, right, for that structure shift to come into play, for the introduction of demand or supply, and then I can enter my trade and I can take profits, right, way quicker, break even way quicker, and I'm completely good to go for the week, the month, the day, whatever it is, however you like to decide to trade that. So we talked about now that high R&R. We talked about why we like that high R&R versus that low win rate, and now we talked about market structure, right? Trends within trends. We'll reiterate strong highs and lows, which we did as well. Now we're going to talk about how to identify a range. So as our ranges develop, right? As we get this choppy price action, how are we going to actually identify where the premium and discount is for this and how we can actually understand to get into trades in discount or into premium? So whenever I have premium and discount, and we talked about premium and discount last stream, but we'll go over it again, right? We want to sell in premium and buy in discount with the algorithms because as from a logical perspective, right, if you have a house, you bought a house, right, and you bought it for super cheap, you want to wait for that price to go up to then sell the house, right? Same exact thing like with any logic. It's literally supply and demand, buyers and sellers, right? You can apply this to almost anything. Price comes back down, right? Houses are cheap again, you buy another house. You wait till it is expensive again, right? And now you sell it. This is how these markets are going to start to move, right? And this is how algorithms are moving price to liquidity. We're talking about liquidity as well in a second, right? But let's just focus on this premium and discount that we have right here. So we buy a house cheap, sell the house in premium, buy the house cheap again, sell the house in premium. We're going to use that same exact logic, right, as we are getting into trades within these ranges. But now let's talk about how I draw my ranges because I don't see a lot of similar traders or similar SMC or anything like that drawing their range like I do, which is completely fine. I may be drawing it wrong, right? But this is what I understand. This is what has worked for me. This is what has proven itself to be true every single time. Now, when I draw my ranges, I'm going to use the most, and I'll just write this down for those that when I have the screenshot, whatever it is, the most external high to the most external low. And this is how I'm going to draw my ranges, keeping it as simple as possible, the most external high to the most external low. So if I have a range that is created like this, right, you get your large drop, your range is formed, and then now you have liquidity within it. Price is starting to move around, whatever it's doing, right? Redistribute, accumulate, whatever it's doing. We don't need to worry about this half of it, but your range is going to be given from that large impulsive move that got retail, that got uninformed liquidity into trades a certain way, right? This is a huge displacement move to the downside. So what is retail going to believe, right? That will continue down, or they try to catch a bottom, whatever it is. It has now created this range where liquidity is going to be balanced, and we are looking for those raids for the introductions of demand or supply to then enter our trades. But the most external high to the most external low. So where did that happen? Where did that displacement occur from the top to the bottom within this scenario, right? Obviously, we talked about this displacement right here. So if I'm going to draw my range, I'm going to draw it from the most external high to the most external low. Now I can start to figure out my market structure within that, where price is possibly going to buy algos are possibly going to buy, and where algos are possibly going to sell as well, right? So if we are in discount of this entire range and I get a break of structure upside after a liquidity raid showing me that demand introduction, then I can now enter that trade targeting supply zones higher up here, right? So obviously price is coming up here. We get a liquidity raid to the downside. We come back into discount, right? But we're still showing bullish structure. We create a higher low. We get that break of structure upside internally within here. And then you can look for that demand zone, right? After that liquidity raid to the downside to enter that trade and take it up into areas of supply. All right, this is how we are going to get into ranges and start to trade these ranges. So obviously the bullish scenario is going to look something like this, right? Where we have an accumulation and then price breaks out to the upside with impulse, right? And then now we are waiting for that range to tell us what type of Wyckoff it is in, right? What we are looking for and how we can get into this. So we're waiting for price to either come down, whatever it is, doesn't really matter. The most external low to the most external high that sponsored the break of structure to the upside following a liquidity raid break of structure, right, is going to hold around these areas right here. So we drop it up like this, wait for price to come back into discount, fill imbalances that are present, right, from that break of structure to the upside, as well as mitigate demand that had started that move, right? Now I have multiple confluences coming together, right? Because now I have a discounted price. I am mitigating what sponsored this break of structure to the upside, right? Now when we come into these areas, we'll look for the buildup of buy-side liquidity as we're coming down. Price comes down to our areas, mitigates our demand, right? Fills our imbalances. It's now in discount of a bullish structure. Break structure to the upside. I can look for my next demand to take my trade, right? And then take this all the way to that weak high that was presented, right, from that strong low that caused a new high. We consider this a weak high. We have creation of buy side liquidity as we're coming down. We're in discount. There's imbalance. We mitigated demand. We broke structure upside on the lower time frames. You can start to see where all of these confluences come together now. The probability is much higher for me to be correct within this trade than it is just buying in discount just because it's there, right? We need to utilize multiple confluences within everything, not just premium and discount, not just Wyckoff, not just supply and demand, not just market structure. We need to bring all of these together, right, to have this higher probability and to enter these trades like this. But now that we have that break of structure to the upside that was presented right here, demand zone creation, right, we can now target that higher time frame week high as price starts to move up into those areas. So when I'm drawing my ranges, it's going to literally be as simple as possible, the most external high to the most external low that sponsored a move that broke structure with displacement, right? And we'll talk about this with that same exact range that we showed with ETH. So let's get rid of this. Let's go over to Ethereum now, and we'll start to talk about that same exact range. And I want to get into this as well when we get into the intro to Wyckoff. But back here on this range over here, let's go to our daily time frame. And let's mark this off right here into replay mode. All right, so let's look at this now. And using the same exact theory that we had talked about before, I actually drew the range, right? On the other video that we had done for the intro to market structure, but I'm going to go ahead and draw it again. Where is that displacement? Where is that large move that got a lot of people, right, within a certain trade, either to the upside or to the downside, right, to try to catch a bottom, or they believe price is going to go this way with force, right? If you look at this as a retail perspective, right, what do you see? From an uninformed perspective, maybe you're playing supply and demand, whatever it is, right? You have this flip zone. something like that, right? You're like, this is the point of control, whatever it is. I have no idea, right? I'm just showing you this support and resistance, this uninformed mindset, and how this can affect us, right? Versus actually waiting for the confirmation, right? But we have a support and resistance, maybe it's a flip, whatever it is, drawn right here. Price comes down into these areas, right? Where is our external high that caused our external low? Keep it as simple as possible. What sponsored that move to the downside? Right here, right? That large break of structure from a low that caused a new high overall. So all of this price action, right, to the upside right here, everything up here is unfeasible unless I can break this high that caused this low right here. Right, so let's look at this range now. We have this little support and resistance flip, whatever it is, drawn right here. And then we will go to our lower time frames now. Right, so as we were coming into these areas, we talked about how we were waiting for the buildup of liquidity, the rate of liquidity, and then the break of structure to enter a trade to the upside. All right, let's go ahead and wait now for that liquidity to be presented. We see that liquidity rate to the downside there, right? Where's the break of structure to the upside? We want to see this high that caused a low broke into the upside. So let's just draw this out like this. All right, where does that occur? Price break structure to the upside right here. Now we have our, again, premium to discount that we were talking about before. Here's our bullish impulsive move that broke structure to the upside. Is there imbalance available? Yes, there is. From this low to this high right here, this candle imbalanced as it broke structure to the upside. It moved so quickly that spreads were so high that not enough orders were able to be filled within this area right here. So we can look for price to possibly come back into those areas, mitigate those areas of imbalance that sponsored that break of structure to the upside, come back with a discount as well, mitigate institutional candles, right? Lower time frame demand. Let's go down here. Right, your rally-based rally. We're going to get into Wyckoff in just a second, but on our higher time frames again, where is that imbalance? Right here to right here. Let's draw this out now. Bring this out just a little bit. Wait for price to liquidate, right? Get into these areas, break structure to the upside. We can look to enter trades that way, but we come down to these areas looking to mitigate this area of imbalance. We mitigate that area of imbalance if we're looking on the 1 hour time frame at this point now. Right, we're waiting for that strong impulse to the upside, showing that break of structure. We get a break of structure from the 4 hour to now the 1 hour time frame following a liquidity raid. So the same exact thing we looked for before. Liquidity raid, price comes up, price comes down, price makes a high and then a low and then breaks structure to the upside. Right, we can look for area of demand just like this to play off of, and for price to continue to the upside after that occurs. Now targeting areas higher within premium, right, with liquidity in premium. But we are understanding we made a high and a low after a break of structure from a strong high right here that caused a new low. Liquidity rate, break of structure to the upside, imbalance, introduction of demand within discount as well. So we look for price to respect this. It respects that. We're looking for price to continue to the upside at this point into areas, and let's just draw this out as 10. Right, that sponsored this move to the upside right here. So we're looking for price to go now into areas of supply. Now, what is retail doing this entire time? They're shorting, right? What are they doing within these areas? Shorting, 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 shorting. What did they see on this move right here? Short, 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 shorts, right? Large displacement to the downside. It broke this. It broke some type of flag, whatever they want to have, right? Maybe if they had something like this. I don't know, right? But it broke their line, broke their support and resistance, broke their flip. They are looking to take this to the downside. They are giving liquidity, giving reasons for price to now continue to the upside with the bullish narrative that we have put in place. So let's go ahead and look at this now. And let's understand what we did, right? As we were traveling up into these areas of supply, we talked about the retail perspective when they would look to get into a bullish trade at this point in time, right? We're already in trades down here after the liquidity rate break of structure upside. Liquidity rate break of structure upside now confirming that 4 hour, right, higher low with the 1 hour break of structure to the upside up into areas of supply. So if we enter trades right here, going up into these areas of supply, where is retail doing? Again, they are shorting, trying to take this to the downside, 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 downside. Where are they putting their stop losses, right? Where's the most external high or the most present, right, stop loss that could be placed, right? If they were trying to get into shorts right here, let's say they got into a short, even at the top of this zone or the middle of this zone, whatever it is, right, on the higher time frames, now they're like, it broke my support, it's coming down into these areas, which it eventually does. But we are understanding when this occurs, why price needs to move where it does, right? So looking at this, we get that move to the upside right here. The breakage structure and demand creation that we had talked about from an institutional perspective, retail is looking to take this to the downside. Where's that most simple place, right? That highest high that they can place this and say, oh, I'm good to go. It's not going to go any higher than that, right? Boom, right here. That is the highest high within this external range that they are looking to place their stop losses. If they are getting in trades, right, down here or even up here in the middle, maybe they even ran it up here, right, from the candle before this candle, and they set limits and they didn't wait for that confirmation, right? Whatever it is, they're setting their stop losses over this high, creating reasons with a bullish narrative, right, creating that liquidity for price to move up into these areas right here. But if I am retail, right, and I don't want to be wrong, I don't want to be wrong within this trade, I'm just going to keep moving my stop loss up, right? I don't want to be wrong, so then I can go flex to my friends, whatever it is, right? I don't want to be wrong, so I'm going to set my stop loss over these highs right here. This is a daily time frame, right? Even look at the weekly. It's a weekly supply zone. I'll be fine, right? I can just let it go and leave it like this, right, with my 1-to-1 R&R on a higher time frame because I want to catch this huge move to the downside. I want to be the guy that caught that top, whatever it is. Let's wait for this now and actually play this out. So we're in longs as they are shorting. We are in longs within discount after the breaker structure upside, after the confirmation of the breaker structure upside. They are shorting. They are giving reasons to price for price to continue higher. So let's play this out now and watch what price does. So as it starts to move higher within the range, where does retail place their first stop losses, right? Boom, right here. This supply zone, whatever it is. They place it right here within EQ. This is that zone, right, that we're not looking to trade off of unless we get that confirmation. Obviously, we saw price react off of the zone, right? So it's not something that I'm just ignoring. I'm still analyzing what's happening over and over again as we are moving into these ranges, right? But retail is setting their stop losses over this high. Price starts to move up. It comes close. They're like, oh no, I'm going to put it at this high now, right? Starts to come up higher. Let's watch it as it comes up. Starts to come up higher, taps this zone. They're like, okay, maybe I'm okay. Or they're like, I don't want to get stopped out. Let's place it on this one. Completely fine, right? So now they're in trades within this. We are in longs, taking profit at these areas of supply from the candle before candle that broke structure to the downside that we had shown, right? Now we're waiting for price, right, to show that break of structure downside with displacement on the daily time frame after we had shown that break of structure to now put our weekly and then daily, right, within play. So we look at this and we're like, okay, we are in longs. We just took profits. We'll wait for a price to either come down here, right, and show that bullish narrative again, or look to take this trade, right? So as we are entering or taking profits, right, they are looking, setting their stops over these highs, or maybe they're even entering shorts at these highs right here, right? If they are considered what a lot of people have called now dumb smart money, right? So what dumb smart money is this mentality that we had talked about before, where they're looking for a higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? Price does not move like this. Price is going to move, right, with accumulations, breakouts, reaccumulations, right, and then distributions, redistributions, and we're going to have a lot more choppier, messier price action than we are going to have this clean higher high, higher low, right, type of theory. This is just the theory of what we are looking for, right? This allows for simplicity instead of always looking for this type of behavior here. But we can't get stuck in that, oh, it made a higher high, it's going to come down and make a higher low mentality. Why? That's too easy, right? Algorithms and institutions can easily manipulate this every single time. They can manipulate a higher high, higher low, this type of feeling. So when we see these clean higher highs and higher lows being presented, that's when I'm like, okay, algos are possibly starting to manipulate that uninformed money, right, into getting into trades one way or another. And that's why we see that 3 drives distribution where it's a clean high, clean low, clean high, clean low, clean high, boom, death, right? Because what is this doing? It's building longs. It's building long liquidity. They're looking at this as either an ascending wedge, right? Whatever it is, as price is moving to the upside. They're looking at it as a channel, right? And they're creating these clean highs and clean lows. Then we see the highs are in and all the shorts are out of their trades, and then it attacks that buy side liquidity below, right? That's why that clean 3 drives distribution is presented just as an example, right? So let's go back to this now and understand what's happening here. So let's take away this. If I can delete all of this, if it will allow me to. Just delete, 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 delete. We talked about the liquidity, right, from the price moving up to these areas. If I'm retail, I'm getting in shorts and saying, I don't want to be wrong, so I'm going to put my stops over these highs, whatever it is, right? So let's just play this out now. Understand that price comes up into these areas, liquidates those highs, and then starts to move lower. What does this do? This builds more retail confidence. What are they doing within this move to the downside right here? Let's look at the daily time frame, right? What are they doing? What is dumb smart money doing at this point in time? This low caused this high, okay? Our next area of demand lies around here, from this impulsive break of structure to the upside right here. So what is this move telling me, right? This displacement move telling me? It's telling me that it's getting retail into shorts, right? So let's go back down now to the 4-hour time frame, and let's see how we can look at that. Well, equal highs are presented. Right, we can see those relative equal highs that are shown right here. What does that show me? More reason to continue within our bullish narrative that we have created right here. What happens, right? Price moves higher, takes out that buy side liquidity, so takes out all of those early shorts trying to get into trades right there. And now what does retail do? They long, right? They're starting to long this, take this to the upside because they were stopped out of their trade at this point in time, right? Maybe it went up here, stopped them out, whatever it is. They start to long. Where do they put their stop losses? Underneath these lows. We talked about the Playbit EMA, so we're going to go ahead and throw it on right here as well. There's nothing wrong with utilizing it, but I like to throw it on to get a type of uninformed retail perspective. If you know how to use it and you know how to trade it and can trade it effectively, it is not wrong, right? It is all about multiple confirmations, multiple confluences before entering trades. But we understand that it breaks out to the upside right here, right? So what is retail doing on a 200 EMA? We talked about this last time, right? But this large trendline breakout, this 265-day downtrend, right, that was created on this move to the downside right here, it breaks out once, they're going crazy, right? You know, everybody is longing this once that trend line breaks out, and once that 200 EMA is presented as well. Everybody is longing that. Where are they putting their stop losses? Now that that has broken to the upside right here, underneath these lows, they get stopped out of this trade, they start to short. What happens? They're taken out again, right? We can see where that manipulation starts to come into play. But even if they were to get into longs, where's the most external spot that they would hold their stop losses? We talked about the shorts. Where's the most external spot that they would hold their stop losses for longs? We know that overall we are bearish, right? So we're waiting for the purge of buy side liquidity to enter a trade. But where are they going to set their stop losses? The most feasible spot, right? Say if we're in a long right here. Boom. This external low. Same exact thing right here. Retail wants to be right. You don't need to be right. You just need to be profitable. Retail wants to be right, okay? So where are they taking this? Trendline breakout. All-time highs. Whatever it is. Maybe to the supply zone. Who cares, right? But they are trying to take this all the way to the upside. Low that caused a high. Higher low. Break a structure. Cross the 200 EMA. We're going to moon, right? That's that retail mentality. Now let's look at this from an institutional perspective, right? So we know that there is retail stop losses above these highs right here, and we know that there is retail stop losses below these lows right here. This is where that range is starting to be created now. So we're looking for the inside, right, how this is occurring. We know overall we're still bearish, so we could come up into these areas, maybe even liquidate highs, right? But as long as we are holding this bearish structure overall from this high that caused a new low, right, and then this high that caused a new low down here, then we can look for the bearish continuation into areas of liquidity below, because that is where algorithms are targeting, right, from the bearish narrative, that bearish structure that they have provided us, right? So let's just delete that. We know that there's longs getting into trades now that this has broken out to the upside. They're trying to take it all the way to all-time highs. Who cares? But they set their stop losses, which is the most important part, at these lows right here because they do not want to be wrong. This low caused this high, so they're like, okay, that's fine, right? Let's get into these trades. So let's go ahead and play it out now. And as we start to come lower within the range into areas of demand, right, we liquidate more lows, break structure to the upside, create more demand, and start to move higher. We break that 200 EMA again, and then we manipulate it one more time, right? We see it come back down. Let's continue to watch this now. Price breaks structure to the upside, creates more demand, breaks out on the 200 EMA. So even if you were in trades right here, you could have had some type of profitability, right? But where are you taking it? I have no idea. But you're getting into this trade at this point in time, right? We talked about the retail stop losses. So where are they going to long, right? Where are they going to flip their buys once they are taken out of their trade? Right here. They're going to, maybe you have breakout traders, right? Who said this high caused a new low. I'm setting limits, right? Setting long limits, trying to take this to the upside once it breaks this high right here. Now it's very tedious, right? And very boring, but we need to understand why price moves the way it does so then we can get a better analysis, get a better understanding of then how we can get into trades and how we can not be stressed out, right? Because now I don't have to be right. You don't have to be right. You just need to be profitable. It's all about risk management in that R&R, right? So we are talking about retail. We got breakout traders, right? Setting their stops wherever, maybe under these lows right here. Same exact thing, that most external point, right? But price has broke structure to the upside, created demand now, but as long as we hold this high that caused a new low or this high that caused a new low right here, and we don't break it to the upside with displacement, then we can look to enter this trade to the downside. Now, price is starting to come up higher, right? We come into these areas, we take out the highs. So what is the retail shorters doing at this point in time? Oh no, I got stopped out, right? They get into their longs. They get into their longs. They're taking this to the upside. I was wrong on this move to the downside. It broke this. It's going to move to the upside now, right? Where are they setting their stop losses? Down at these lows. What happens when price comes into these highs right here? Let's go to a higher time frame chart just to understand. Uh-oh. Daily broke out as well, right? More longs getting into trades as we are showing a bullish narrative. We just took out equal highs, a ton of equal highs within a bearish sentiment. If I see a liquidity rate, so a large displacement to the downside, then we know that we have been in peak premium, right? We took out the buyers, or the buy side liquidity, so all the shorts are now out of their trades. Everybody is saying long. They're looking at this as the biggest breakout of a lifetime. Daily just broke to the upside as well. Let's watch what happens. Break a structure to the downside with displacement, and now that all the shorts are out of their trades, right? Supply is introduced, and then where is it going for? Let's play this out. Boom. You're stopped out of your trade. So you tried to short it to the downside on this move right here, and you tried to long it to the upside on this move right here. You are manipulated out both times as somebody who is uninformed, not understanding premium and discount, not understanding institutional concepts, whatever it is, right? But at this point in time, right, this is why we are looking for that liquidity, for those equal highs and equal lows. So now that all the early buyers and sellers are taken out of their trades, we can now enter and look to take it a certain way. So understand, right, that you do not need to be right. You do not need to catch this whole move to the upside. You do not need to catch this whole move to the downside. As long as we are finding trades within premium and discount and our market structure perspective, right, using Wyckoff as well for confirmations. We're getting into Wyckoff in 1 second, but understanding that we are using multiple confluences to now enter trades within discount, right, buying within discount and selling within premium, we now have much more profitability opportunity and the ability to tell whether we are right or wrong a lot quicker, right, than waiting for that retail perspective where I'm right, I'm right, I'm right, I'm right, I'm right, I'm wrong, flip my bias, wrong again, right? And now I just blew my port on this 1-to-1 with a 36% stop loss to the downside, right? Because I want it to be right, but who cares? You need to be profitable. You don't need to be right. So let's take this off now. And we'll go into a little bit of Wyckoff. We have about 10 to 15 minutes or so. I'm just going to give you guys the behavior, why they move the way they do, and then we'll understand where they occur. So Wyckoff is actually present within every single higher time frame to lower time frame low, every single lower time frame to higher time frame high, in every single continuation that is present. Wyckoff is there. The markets don't move without manipulation. So what is Wyckoff, right? The understanding of it is there are many manipulation schemes, right, that are occurring. But to understand what it is, we talked about last time, right, where it's just a one entity, one composite operator moving price, and obviously it's a lot more, but we use it as one to simplify it, right? But one entity moving price, manipulating price to then take price to certain areas of liquidity within premium or discount. And this is how we can now identify that through Wyckoff, through these manipulation schematics, when price seems to have that choppy price action, right? And we don't really know if it's making a bullish or bearish trend. That's when we have our areas of accumulation, distribution, redistribution, and reaccumulation, right? So let's go ahead and put down Wyckoff. What it is, it's present within every reversal. And continuation. All right, so our Wyckoff is present within every reversal and continuation. Let's talk about the terms. What are they? So for your bottoms, right, for your moves to the upside, these moves right here, accumulation, right? That was actually terrible, but let's just draw it out like this. For your accumulation, right, those are those bottoms. For your distribution, it's going to be those tops. Right? And then for your reaccumulation, it is going to be the continuation of that bullish trend that has occurred. So you have an impulsive move. Then we have a distribution to then accumulation. Right? There's your continuation on the Wyckoff perspective right here. And then where's the continuation to the downside? That redistribution. Price comes down, does the literal opposite, right? Then accumulation takes out the highs, takes out those early sellers, and then continuation to the downside. So understanding that it is every reversal on a 1 minute time frame on a hold on, let me go ahead and check crypto chat. I just got added. Apologies. Sandon's talking about the 36% stop loss. But yeah, looking at this, right, and understanding that with Wyckoff, and that is going to be present within every single reversal, within every single continuation, right, is going to allow us much more comfortability when we are entering trades. So what is it? How can we identify this, right? An accumulation, and this is this highlighted area right here, right? Our accumulation that has occurred is going, the whole purpose of it, and let's find out the purpose, right? The whole purpose of it is going to get out all of the early buyers before continuation higher. So what does that mean? As price is coming to the downside right here, right, and manipulating lows, buyers are now getting short, right? They are getting short within their trades. The uninformed liquidity is getting short. They are trying to continue to take this to the downside. What does that do, right? We talk about this a lot, but it creates that buy side liquidity because they're now shorting every single high, trying to take it lower, right? It's creating that buy side liquidity. They're setting their stops over these highs. They're creating reasons for price to move higher once it shows that bullish narrative, right? So the whole point of accumulation, and let's just draw this out to the side right here, is to manipulate early buyers before a reversal. Put this in much, much less. Right? So for accumulation, we're manipulating early buyers, trying to get all the early buyers out of the market who are trying to catch a bottom, whatever it is, before that reversal to the upside. Now, distribution, opposite, right? Let's keep it as simple as possible. So for our distribution, the whole point, right, is to manipulate early sellers now before downside, right? Before a reversal to then the downside. So our accumulation, what were we doing? Getting people short, right, as we were coming down within these areas. What are we doing with our distribution? Manipulating highs, getting people into longs, creating that long liquidity that we had talked about before. Now gives a reason for then price to have that reversal. keep it as simple as possible. This is this flipped. This is this flipped. It's the same exact thing, right? We are just understanding the behavior. We're looking for the manipulation of highs, buildup of the lows, manipulation of lows, buildup of the highs for our reversal schemes, right? These are deemed actually the simplest to start to learn, the simplest to start to recognize on the charts. The harder ones are going to be these continuations because they are actually a mix of both of these accumulation and distributions. So with an accumulation, we're looking for the manipulation of lows, left highs, manipulation of highs, leaving lows. Now, what do we do for continuations, right? Let's go ahead and look at this now. So for a reaccumulation,
You can do this over the NASDAQ, just so you know, because it's doing redistro right now, and people are trying to long it.
let's go
Just
look
throwing
at
it
it.
up. It's that same exact pattern you have on there. If you go down to a 15-minute,
Yep.
it's the same
Accumulations and
thing
then
you're fucking
distribution.
explaining right now.
Well,
Yep.
it's the one we caught on ETH, dude. The same. It's that same mentality. Look,
Yep.
price is manipulating lows, right, for the redistribution. Takes out the highs. What does it
Boom.
do? Creates supply. Boom. Distribution to all of this is just buildup of early longs trying to catch a bottom,
Look at that
whatever it
shit.
is. It's
Beautiful.
nasty, dude. I love
Chef's
continuations
kisses.
because they show how beautiful it is. But yeah, no, I appreciate that. But yeah, man, it's insane, right? These manipulation schemes that start to come out, and then when you start to feel that and start to get comfortable within that, then you're now preying on retail, right? You're preying on these lows to the downside right here, and you are catching these 1 to 30s, 1 to 20s that appear. We'll talk about this trade in a second. But just as Alga was saying, um, with those schemes, right, the whole point is to manipulate those buyers or sellers into trying to catch a bottom or trying to catch a top. But we as institutional traders are not trying to do that. We're not trying to catch the bottom. We're not trying to catch the top. And what does that allow? It allows for much more patience. It allows for much more profitability opportunity. Let's go back to the higher time frames to find where I actually put all that out. I think it was on BTC. Actually, let's just go back. Up into these areas. If that's where it was. Did it just delete all of that? Oh, nope. We're good. Okay.
No way.
That scared me. That scared me. I'm not going to lie. Okay. But we're looking at this, right? We'll talk about the continuations now. For our reaccumulation, it is going to look like a distribution in the beginning. And then start to create an accumulation. So it'll go from a distribution to then accumulation. All right, so we have that drawn for the reaccum now. Here we go. Here we go. Okay. So looking at it like this, right? Our continuation to the upside, our reaccumulation to the upside is going to look like that distribution in the beginning, right? We're going to be manipulating highs, leaving those lows. But we know that overall we're still bullish, right? We know we're overall still bullish. So as long as we hold this low that caused this high to the upside, then we can still see that continuation to the upside. So where's that introduction, right? What do we do when we look for introductions? We look for a liquidity rate, we look for the break of structure, and then we can then play the continuation. What is this? Liquidity rate to the downside. What is this? Break of structure to the upside. We now have a distribution to then accumulation, and price is going to now continue to the upside, right? So we can look for trades within these areas. Because a lot of the times when we see these large impulse moves to the upside, smart money, whatever, dumb money, right, has a demand zone down here. They're waiting for it to come down to these areas. They maybe see a supply zone right here. They short this on this displacement to the downside right here, right? They're like supply zone, supply zone, supply zone, whatever it is. They're just leaving reason for now. Price to continue to the upside right here. So this is your continuation, a reaccumulation. It looks like a distribution in the beginning, but it's actually an accumulation. So we look for distribution to then accumulation, break a structure after a liquidity raid. Opposite goes for this area. So we talked about distro to accum. This one's accum to distro, right? We have an accumulation, manipulation of lows. What does this do? Get everybody into longs, just like we had shown with ETH. On that play right there, I'll talk about how I actually got into that in 1 second. But we see the manipulation of lows. We're leaving the highs. Once we take out the highs, get everybody into longs, right? What happens? Price break structure to the downside continues its overall bearish narrative, right? So let's just go ahead and put down that definition as well. But it is literally opposite. Keep it as simple as possible. So for a redistro, right, it looks like an accumulation, but is actually a distribution. Right, so we now have both of our continuation as well as our reversals placed out right here, so we can understand right where Wyckoff is going to be presented as far as reversals or continuations go. We talked about how it's literally in every single high or low from the monthly to the 1 second. I can show you Wyckoff and how it is presented, right? Price is fractal. What you see on the 4 hour, the behavior you see on the 4 hour is going to be the behavior you see on the 15 second. It'll be the same behavior you see on the 15 minute. It'll be the same behavior you see on the 1 second. It's the same behavior that we are looking for over and over again. Then we can use our higher time frames to then confirm to our lower time frames. So I'm going to go ahead and reiterate this or show this ETH play now so we can see this coming to light. From a continuation perspective, we'll get into more information on Wyckoff, right, within our next stream as far as how we are looking to actually trade them. But just understand the behavior, and that's what we're going to be showing with this trade right here. So we have our Wyckoff. We understand it's present everywhere. We understand accumulation to distribution, our reaccum, and our redistro. Let's go ahead and move over to that ETH play now. So down with these areas, right? Let's talk about this breakdown. Let's talk about why this occurred. I'm going to go ahead and take off this EMA so we can make it a little cleaner and understand this chart at this point in time. So let's just go bring this replay mode back into these areas. And let's look at the 4 hours. So we have a daily bearish move to the downside, right? We're looking for our range to be drawn. Where's that liquidity rate presented? We get one right here, right? Where's the external high that caused the external low? Present right here. Drop base drops. Sorry, I didn't mention this within the Wyckoff, but our drop base drops. So we see a base and then another drop is going to be that continuation, so a redistribution to the downside, which then creates supply. And then the rally base rally is going to be that continuation to the upside that creates demand that we had mentioned, right? So let's look at this. We see our most external high that caused our most external low. Go ahead and draw that down right there. Where's our supply zone? Right here. So we're looking for the continuation to the downside. As long as the 4 hour does not break this high right here with displacement, then I'm not looking at a break of structure. I'm looking at more of a continuation to the downside. So how do I mark my 4 hour higher, lower high within this point in time? With an hourly break of structure to the downside. So let's watch the hourly as it comes into these areas of supply. Looking for the manipulation of lows to then the manipulation of highs, leaving lows, right? So we manipulate lows right here, price break structure to the upside internally, comes back down to this institutional candle that we have placed right here, and then starts to move higher into areas of supply. But what is it doing while it is doing this, right? It is manipulating highs. And what do we see present right here? Clean long liquidity to the downside from our bearish narrative that we already have. So we're still looking for price to move to the downside, but we need that introduction of smart money, right? Of that higher time frame. Sorry, not higher time frame, but higher entity, right? That footprint that is going to be shown. So let's wait for it. Price starts to come higher into these areas, right? Fills this fair value gap, starts to move lower. That's completely fine. I'm still looking for areas in premium where I can look to sell. It comes up to this supply zone. We're looking for now the manipulation, right? The liquidation rate of the early sellers, so then we can enter our trades. We're watching price. It manipulates those highs, right, to the upside right here. We're looking for a low that caused a new high to now be broken to the downside. Let's take that off. Let's take this off. Let's take this off. Let's bring this back just about one. All right, we see a low formed right here. We see this high formed right here. Right, so this low caused this high internally. On the hourly time frame, I'm looking for that price to be broken, right, for the creation of supply.
Hey.
Let's play this out. We get a displacement candle to the downside. Where is your candle before that candle that broke that structure point to the downside? Where is it presented? Right here, right? Your higher time frame supply zone. We can go to
Fuck,
15
man. My
minute and mark that
Traceways
as well.
fucking call me back, dude.
And then once we are looking at that, right, that candle before that displacement candle that broke that structure point to the downside, where can we get into trades at this point in time, right? At the supply zone. So now my higher time frame 4 hour has gone in with my 1 hour. And now we can look to take this now to the downside into our areas of sell side liquidity below, right? So let's watch price action as it comes into these areas. We are tapped in, right? We need to now see that 15-minute break of structure to the downside as well. So this was just the hourly, but we can wait for the 15-minute as well from a low that caused a new high. Let's watch this out. This low, let's just play this out. This low caused this new high internally. It's broken to the downside. Where's your 15-minute, right? Candle before candle that broke structure to the downside. So this is how we can start to see from now the 4 hour to the hourly to the 15 where we could get into trade. So if you are not in this one right here, we have another short position presented right here. Again, targeting that same area, that same exact narrative to the downside. Into our area of demand overall, as well as liquidity, right? Multiple confluences coming into play. Let's watch this play out now. We see more displacement to the downside, telling us that price is breaking structure to the downside, which is perfect, right? What we want to see. Let's go to the hourly time frame. Look at our higher time frames, right? Price is now starting to come lower. Perfect. This is exactly what we want to see once we enter our trade, right? Now let's go ahead and watch what price does if it comes into this area of supply that we had mentioned before. Price starts to move lower, right? And then it creates a large displacement to the downside. Let's go look at your 12-hour time frame. All right, we see a break of structure to the downside on the 12 hour. So where's your candle before candle that broke structure to the downside on the 12 hour now, right? Right here. So this area of supply that we had marked, right, is starting to come into play now. So let's go back to our lower time frames. Just because I have not been tapped in right here, right? It's completely fine. We are all good, right? Why? Because we had that creation of supply right there. We are looking for price to come back into these areas. Otherwise, our narrative will be proven wrong, right? If we continue to just move downside, create buy side liquidity, and then break structure to the upside within discount, right? But let's watch this out. We still have our area of supply. We are looking for price to come and tap into to take out early sellers that took all those sells on that buy side move to the downside, right? What do we see? Price boom, right? It moves up to the upside all the way into our area of supply, that candle before candle that broke structure to the downside on the 15-minute now, right? What does this leave? A lot of area of imbalance. What does that tell me? A lot of areas to come down to. What does that tell me as well? We have a break of structure to the downside on the higher time frames. We have more buy side liquidity present below, more buy side liquidity present below, as well as an unmitigated demand zone overall, right? More confluences coming into play. We now have a 4 hour to 1 hour to 15-minute break of structure to the downside with our area of supply. We have entered our trade. We are now targeting the lows, right? And let's play this out. Liquidity rate to the upside, creation of supply, continuation to the downside. Right, this is now where we can see that narrative and not get stuck trying to long, and instead wait for premium to come into play, wait for the supply creation to come into play as well, wait for your lower time frames to confirm that, wait for the supply creation on lower time frames here, and then you have your overall higher time frame narrative. But with that being said, that was pretty much everything that I had for you guys today. If anyone wants to ask questions, feel free to do it now for the next minute or so. If not, no worries. I'm going to check stream chat. They are recorded. Yes, I've recorded these. They will be posted to the YouTube once they are done, and I will make you known in lessons when I do get that done as well. Probably edit it. Should be up before the end of tonight. But with that being said, is there any questions? If not, then I will go ahead and end this stream. I hope you guys learned a lot today. I hope you guys were able to get that understatement of Wyckoff, market structure, and that understanding of high R&R, low win rate versus that low R&R and high win rate type of ability. But like I said, it's all personal preference, everything to what you want to make it comfortable for you, how you can make it comfortable for you. And because then that breeds confidence, right? And then that will breed consistency. And then from there, right, you can only improve. So with that being said, I don't see any questions or anything like that, which is completely fine. I will catch you guys later. I hope you guys have a great night. Actually, oh, you need to be unmuted. I got you, brother. 1 second. Let me know if you can speak now, brother.
Hear me?
Yes, sir. Yes, sir. What's up?
Hi, my man. I have a question regarding Bitcoin. 19.3 is my POI. I just wanted
Okay.
to know if it was valid or invalid.
19.3.
Yeah, my phone's at 1% too, bro. So if my phone dies, I'm really sorry.
Oh, you're good. You're good. So we are within an institutional candle right now. To call the validity of it, I would actually look for a daily breaker structure to the upside at this point in time because we have broken daily structure to the downside and created supply. So I would want a lot more structure personally to long this once it is given into play. We'll watch for maybe even a 4-hour imbalance breaker structure to the upside, and we could look to play something like that. But right now, I'm personally not looking for any longs until they are presented.
Much appreciated, my guy.
Of course, of course, of course. Anytime. But yeah, with that being said, I don't think there's any more questions or anything like that. Again, I appreciate everybody who had popped out on a Sunday night trying to get more information, trying to get better at your game. Already, like I had said in the beginning, because you are here, because you are doing this, you are going to be already in the top 10%, right? Because you are sitting here trying to get this done, trying to get this information. Thanks again, everybody. This was recorded and will be posted, and I will catch you all later. I hope you have a great rest of your day and or night.
Thanks, bro.
Of course, of course.